Hi traders, this is Pradeep. In this video, I'll be explaining about the signal generator that I have been working since couple of years. This signal generator gives out entries and exits for BankNifty options and specifically for buying options. Okay, uh, please watch till the end of the video to know exactly the advantages of this software and who it is actually suitable to. Okay, who all can actually use this software. Okay, now before explaining in detail, let us see the signals that have been generated for today, that is 18th April 2024. The chart that you are looking at is the Bank Nifty futures chart. It is a 1 minute interval chart. And all these let's say these are all the option strike charts that have been opened depending on the highs and the lows of the Bank Nifty futures candles. Okay, whenever a new high or a new low is touched by the Bank Nifty futures chart, appropriate options chart is opened. The sounds that you are hearing, they are the alert sounds, and they come whenever there is a signal like entry of an option strike and an exit of an option strike. Okay, now as I said, these are the option strikes that are open. The charts start opening at 9:24. The above chart here is 47,800 C option strike chart, and the below is the option strike chart of 47,900 PE. Okay, there are various lines displayed on every chart. I'll explain to you each line in detail, but before that, let's see what signals have been generated. Probably because I'm using this recording software, which is Streamlabs desktop, this thing is a little bit slow, but usually it is very quick. Now let us see the signals generated for 18th April, that is today. If you see, we got a sell signal in Bank Nifty futures, which is nothing but buying a put options. Okay, there is a buy put option signal generated at 10:16, and we only target 50 points in any option strike. So as soon as the option strike bought signal is executed, we automatically give a limit sell order adding 50 points to the entry value. The signals of execution are also automated. Like if the signal generator gives a sell signal, and the appropriate option strike is automatically bought. Okay, and the limit sell order is also automatically placed. Now for that, there is a separate program written to automate the execution of the signals from this software, which I'll explain in a separate video. Okay, so let's see the signals today. We got a sell signal at 10:16, which means that we have bought a 47,800 PE strike, and we sold it out for a profit of 50 points at 10:21. And after some time, we got a buy signal at 11:02, which means that we have bought 47,500 CE call option, and we also sold it out for a profit of 50 points at 11:07. We actually traded these signals today. You can see the YouTube short that I uploaded in my channel. Okay, so today has been a very straightforward day, and these are how the signals are generated. Now, as I told you, I will explain the lines that are displayed on each and every option strike chart. these are not, you need not know in depth of these indicators. These are nothing but actual indicators. Okay, you are all aware that there is something called super trend indicator, which is displayed in almost every web portal of trading brokers, right? Like Zerodha or Angel or Upstocks, anywhere you can see a super trend indicator. Okay, the the real actual super trend indicator actually has two lines. One is the top line and one is the bottom line. But as far as I know, every trading portal displays only one line, depending on the trend of the the direction of the candles. Let's say if the market is going up, if this 47,800 CE strike is going up, the trading portals only display the bottom line. Okay, if the strike is coming down, the trading portal only displays the top line. As soon as the strike starts going up, this line is made invisible and the bottom line is shown. I'll repeat it. I'll repeat it. Please listen to me carefully. Depending on the direction of the strike, the line which has to be displayed is decided. If the strike is going up, the bottom only the bottom line is displayed. If the strike is coming down, only the top line is displayed. Okay, but in actuality, the super trend indicator has two lines. One is the top line, the super trend upper line, and the bottom line, that is super trend lower line. Okay, please remember that. Okay, now there is another line called VWAP. This is just displayed for visual purpose. There is no usage of VWAP. Actually, this is not normal VWAP. This is anchored VWAP, which means that this VWAP is calculated based on the opening of the chart. So this chart is opened at 9:24. You see, so the VWAP is started calculating at 9:24 only. Let's see, this chart is open at 10:22, right? So the VWAP is started calculating at 10:22 only, like this. This VWAP line is not used in the signal generation. It is just showed for display purposes. Okay, we finished off VWAP. We finished off super trend indicator top line and bottom line. There are two other lines, 9 simple moving average and 18 simple moving average. This is also displayed for showed for only display purposes. These two lines are also not used in the signal generation. Just to give a broad view, or what should I say, a very vague view of the direction of the market. Okay, so we have covered super trend indicator, we have covered VWAP, we have covered simple moving averages. The two lines, the other two lines, which are actually forming the basis of this signal generator software, is these two lines. One is the black line here, one is the green line here. Similarly, one is the green line here, one is the black line here. These lines are actually proprietary indicators developed by me, and I've developed it, I've finalized it over many years. I've been actually working on this software for at least 5 years. And these two lines are proprietary indicators, and these form the basis of the generation of the signals. To very vaguely, or generally explain what these lines are, these actually provide support and resistance levels of these strikes. Okay, I'm explaining it to you in a very simple manner. They serve much larger purpose, but in a very generic way, these two lines are nothing but support and resistance lines of the options strikes. Okay, now we have covered all the lines that are displayed in the option strikes. I request you to watch till the end of the video to know who exactly this software is suitable for. Okay, as I said, this is a Bank Nifty futures chart. This is a 1 minute. All these charts are 1 minute interval charts only. Okay, and these lines are also displayed for visual purpose only, but they actually serve the trader to know the direction of the market. this black line is called VWAP. The red, blue and green line, these are the parts of volume profile. Volume profile is nothing but it shows the area between which 70% of the Bank Nifty futures is traded at any point of time. Let's say at 10:44, Bank Nifty till 10:44 has traded 70% of the time between 47,676 and 47,904. Okay, and most of the volume has been traded at 47,867. This is just for display purpose, but it actually tells you how the volume is distributed. The volumes, the contracts that have been exchanged between the buyers and the sellers have been distributed till any point of time. Okay. Any signal generation is indicated by a variety of symbols like a circle and a square. So there was an entry here. If you see, the chart has opened at 9:39 and there was a signal generated at 10:16 and exited at 10:21. This is what is displayed. This is what is put into these text files. Chart is displayed at 9:39. Signal, entry signal is generated at 10:16 and exit signal is generated at 10:21. Okay. Now, today's sorry, excuse me. Today is very fairly not so complicated day. We got a simple sell signal, we got a buy signal, only two signals, and we were able to target 100 points, 50 points in each entry and exit. Okay. But it is not as simple as today on all days. Let's say 17th and 16th are holidays. Let me show you what has happened on 15th. Sorry. See, 15th April was a very dull day. It hardly moved much, but afternoon after 2 o'clock it made some movement. Let's see if our signal generator has given us any signals or not. Well, yes, we have a buy signal at 10:40, and which means that we have bought a strike option call strike at 10:40 and exited at 10:56, grabbing 50 points. Well, this is also a fairly simple day. I actually wanted to show you a day where there will be reverse entries as well. You need not be worried about so many signals generated. I will explain to you in detail how these signals are interpreted. Okay, in the next chart, 15th April is also a fairly simple chart. There was one entry and there was one exit. Okay. What I'll do is I will open another chart. I remember this thing called December 29, 2023. Yes, you see this chart must have, no, it must have kicked out lots of traders on that day. It went down and then again went up and then again came down, again went up. But how would we have traded this day? We have the solution. It's here. As you see, if the if the signal generation criteria are not met, the unnecessary charts are automatically closed so that the resources of the computer are not consumed. Okay, since this is Mozilla Firefox, and many tabs are to be opened at times, it consumes resources and it might crash. So what I did was, whenever there is no signal, whenever a chart doesn't meet the signal generation criteria, it gets closed automatically. If you see on December 29, there was an entry at 9:59, and which means that we have bought an option signal, put option strike at 9:59 and sold it off after getting 50 points profit. This was a fairly simple signal. But what about the next coming signals? There was a buy signal, call option strike buy signal 11:17, but then let's open this chart that is actually opened at 10:29 so that you will be able to see it clearly. So 10:29 is here. Okay. See this put option chart, and this is the call option chart. In the put option says there is a buy signal in the call option chart. That is what you are looking at. You see 11:17 is a buy signal, right? 11:17 is the buy signal, and after some times this has generated a reverse entry signal, which means that we'll have to come out of the call option strike position and buy the put option strike position, and in here we will have to grab the 50 points profit. Well and good. So that one entry says that you need to buy call option, and then the other entry says come out of the call option and buy this put option and grab 50 points profit. Nice. Simple? No, it's not simple. See, our main intention is to make money out of options buying. Okay. If the first signal has generated loss, then it is also important for us that we recover that loss and then grab the profit of 50 points in the next entry, isn't it? This is where the automatic signal execution code comes into picture. Let me tell you. Broadly, when there is a buy option signal at 11:17, there is a reverse entry given at 13:02, and it also says that we have lost 63 points, a maximum of 63 points in this signal, in this entry. Okay, so we'll have to cover this 63 points, and then we will have to cover the 50 points target in the reverse entry signal. How are we going to do that? I'll tell you. It's simple. Let's say we are trading with two lots, which means that 30 is the size. Okay, so usually in a very simple signal execution, if we get a profit of 50 points, we get a total amount of profit of 1,500 rupees for that signal. Okay, that is what we must have gotten with this signal code 9:59. We have captured 50 points profit for the signal that is generated 9:59. Okay, now we have captured a loss of 63 points for the signal generated 11:17. So we'll have to recover the loss of 63 points also. So how are we going to do that? Let's see what is the total loss of 63 points that has given us for trading two lots. So 1,890 is lost. Okay, now as I said, for every 50 points we have a profit target of 1,500 rupees, right? So we add another 1,500 rupees, and to determine the eventual next lot size that is to be traded at 13:02, which has to cover the loss of 63 points and give a profit of 50 points divided by 750. The 750 here is nothing but 1500 divided by 2. Divided by 2 is because we are targeting a profit points of 50 points. Okay, so 4.52, which rounds up to 5, and then we multiply it to 15, which is the lot size of the BankNifty options. So in this case, after we enter the signal generated at 1302 and grab a profit of 50 points, which is nothing but 75 into 50. You see, the total profit here is 3750. In this, we have recovered the loss of those 63 points. You see, we have lost 63 points by now trading modifying the lot size to 75 and grabbing the profit of 50 points. We have recovered the loss of 1890, and also we were able to get an extra profit of little more than 50 points. Okay, the gist of what I just now explained is, whenever there is a loss generated in the previous signals, we tend to cover that loss and make profit again in the second signal by increasing the lot size appropriately. Now you see, we have a buy sell signal at 1302, which means that we have bought 48,600 PE at 1302, and then there is a profit at 1414, wherein we have captured the profit target of 50 points here. That is what you are looking at. Exit put 1414, reverse profit. This is the main entry, this is the reverse entry, and this is the reverse profit. Done. Yep. So on 29 December 2023, we had two signals. One is straightforward signal, one entry and one exit. The other one is two entries. One is normal entry and other one is the reverse entry, and a profit. Right? Now, it looks simple, right? It looks very simple, but it is not. In my opinion, options trading is the toughest job in the world to make money. But once we know what to do, it becomes the easiest one also. And in options trading, options selling is easy, and making money in options buying is very tough. Okay, the reason many people choose options buying is, the main very first reason is they don't have enough capital, enough money to start trading with. Most of us have only 10,000 rupees or 20,000 rupees. At the most, we might have 1 lakh rupees. And we people with very low capital would want to make money and become rich very quickly. And hence we become very poor very quickly. Okay. Yeah, that is how I summarize it. We tend to make money very quickly, and that is how we lose our money very quickly. So let us give a pause here and understand why option traders, that too people with low capital, tend to fall into this trap of options buying. I will open you a chart, and then probably we can understand with that as an example. What should I do? I'll open December 4th chart. Remember the December 29th chart that we just saw, and then compare it with the December 4th chart. You see, market started here and way it went up, and then suddenly we option buyers start to dream that what if I entered here at 9:45, 9:50, and then I exited here at 15 o'clock. That is 3 o'clock in the afternoon. I would have made so much money. We option buyers always tend to think that these days often come, you know, these days often appear in the stock market and we can make huge money very quickly. The problem is these days do not happen very quickly, very often. In my experience, such days only happens once or twice in a month, or probably not at all in a month. So we tend to focus all our energy and time in trying to make entries into these days, and if we are lucky we might make money on these days, and then expect that most of the days in the stock market are like this, and we put all our hard-earned money on those days also, like December 29th, which was making a sine wave kind of market, and we lose all the money, right? This is the biggest obstacle for option buyers to make money. This is a trap that has, we have been trapped into markets days like these. So we are psychologically trapped that we might on some day, somehow these days will come and we will make huge money on those days. No, the trending days do not appear often. As I said, these days might come once or twice in a month, or in 2 months, or never in an entire month. So if your trading system is solely dependent on trending days, and if you're an option buyer like I was, where I was always looking for trending markets, we are doomed to fail. We will not make money. We will not make progress. Very luckily, if we make, we are going to lose that amount again in the very month or the next month, and again we will start blaming the market, saying that this is all a gamble. But let me explain to you, I have spent almost more than 5 years in this market. I've lost around 4 or 5 lakhs till date. I've given so much fees to the market. I've studied so much, and I understood that if we have to make money in buying options, we cannot solely depend on the trending markets. We might have to find a way wherein we might miss trades on a trending market, but we will not miss trades on a non-trending market like December 29th, or a market like today, that is 18th April 2024, okay, or April 15th. So if we develop a system that is not dependent on trending markets, but on a market which moves like a sine wave, or a market which is stagnant, we option buyers have high chances to make money. Okay, let me close this. I just wanted to show you the trend of the day. Oops. Now, oh, okay, this is the signal generated for 4th December, wherein we got a sell signal here first, and then we had a loss of 143 points in the signal generator, in the sell signal, and then we recovered these 143 points and also a profit of 50 points by 1244. Okay, now let us calculate the new lot size at 1212. Let me put it here. Let me open the calculator. Now let's suppose we started with a lot size of 2, which is 30. 2 into 15 is 30, and entered at 1034. That is 46,100 P. And the entry open chart is 1001. Okay. Now, if we had if you see, there is a reverse entry at 10:01 as well. So there we lost points of 103. So multiply it with 30, that is 103. Sorry, 30 into 103, that is 3090 rupees is lost on this first signal. At our target of 50 points into 30, lot size is 2, right? So 50 into 30 is 1500 divided by 750 to calculate the new lot size of the second trade at 1212. So 7 would be the lot size into 15. So 105 would be the new lot size. 105 into 50 comes around 5250, wherein we have recovered the loss of 3390 that was given in the first trade. So let us deduct the amount 3390, and this is the profit we get after the second trade. Okay. If you see, the market has trended a lot on December 4th, 2023, but we were able to get only one profit only once. But on December 29th, if you remember, please go back in this video. We got two signals. One is a direct sell signal, and other is a buy sell reverse entry, right? So the whole purpose of developing this signal generator software is to see that we might miss trades on trending days, but we most of the time we don't miss the movements of the market on non-trending days, because trending days only appear only once or twice in a month or never in a month, but non-trending days are almost every day, isn't it? Right. Now I'll give you a calculation of a very broad calculation of profits that we might get in a month. Let's say, and the other important point is we don't trade on expiry days, because option buyers, if we trade on expiry days, most of the time the options go back to zero, so we will lose the entire premium. So we don't trade on expiry days. What is this? Okay. So as I said, let us calculate the probable profit. Assuming that we get one signal generated every day, I'll explain to you what actually happens later. But assuming that one signal is generated every day, which means that 50 into, and the lot size is 30, that is 1500 rupees per day, into removing the expiry days, we might get at the max only 15 days in a month. So that would be 22,500. Okay. Now, so this seems to be very less. 22,500 seems to be very less for a lot size of 30. And I only assumed that we might get one signal every day. But my experience, at least for so many years, says that we might get one signal every day, and also there are couple of days where we might get more than one signal, like December 29th or April 18th, like today's. Okay, let us assume that there will be 5 days where we get two signals. Okay, so 5, so 20 signals entered in a month, and there will be at least one day where we will be getting 3 signals. So that would be 21. So 21 into 50 into 30. So that is the final amount that we might be getting on a month on an average. I'm giving you a very conservative amount. It might vary. As I said, nothing is fixed in the stock market. Now, this is the reason why I told you to watch till the end of the video to know the benefits we have with this signal generator. Okay. As I said, options making money through options buying is next to impossible. It is very, very difficult. But I never said that it is impossible. I never said that it is totally impossible. No, it is possible. But if we control our greed, if we have very reasonable profit estimates, then yes, we can make money in buying options as well. This is not a get rich quick scheme. This is a scheme where you will get stable money every month, month on month, which might not make you very rich, but yes, it will add to your bank balance in a very stable manner. Remember, we had to trade with different lot sizes depending on the losses given by the signals. Okay. In my experience, we might get 4 consecutive losses. 4 consecutive losses. Let us say we get on an average 75 points loss in every trade. 4 consecutive losses in every trade. Okay. So please listen this section very carefully to know why I told you the benefits of this signal generator and to whom it is actually suitable to. You can decide whether it is suitable to you or not. Okay. Give me a minute. Give me a minute, please. Hello. Sorry for the delay. There was a phone call. Okay. Now let's say we lost 75 points consecutively for 4 signals. So that would be 30 into 75, and we add our profit of 1500 divided by 750. So this is the second lot size, second trades lot size, which would be 15. Again, as I said, into 75 plus you should cover the previous losses, right? 2250 and add 1500 rupees profit. That would be 3750. Now to know the lot size to be traded for the third signal, we divide it by 750, that is 13. 13 into 15. Again, if we lose 75 points, that would be 14,625, and the total losses till third signal is 9,375. 1,375. Again divided by 750 to know the new lot size for the fourth signal entry, that is 32 into 15. So you see, if there is a consecutive loss of 4 times and each signal has given you a loss of 75 points, it has happened once. Okay, in 2023, entire 2023, it had happened only once or twice, but we should be ready for the worst case. Okay, so 480 into, let's suppose on a good day the option premium, whether it is call or put, is 600 rupees. So that would be your actual requirement, 2,88,000 rupees to trade the fourth entry. But remember, we lost 24,000, 2,250, 5,625, 14,625. This all adds up to around 50,000, right? Let us calculate how much we have lost. 24,000 plus 9,000, around 34,000. 34,000 plus 3,750. 38,000. 38,000 plus whatever. So at least there would be a other requirement of 50,000, the last amount. Oh, I'm sorry. What was that? 2,88,000 plus 50,000. Come on. So the total capital you should be definitely having to trade the fourth entry is 3,38,000. My suggestion is to see that if we get this worst case scenario, we might get it right. If it has happened in the history, it will happen in the future. In Bank Nifty options trading, people will say that past results are not the indication of the future results, but past failures are definitely to be repeated in the future as well. Okay, so as I said, if it has happened once in an entire year, there is always a chance that it will also happen in the next year as well. So in this case, if we had to trade the fourth signal also, you should have at least a capital of 3,38,000. But my suggestion is to trade two lots. To start trading with two lots, you should have a capital of 5 lakhs. Okay, and as I said, if we have 21 signals in a month for a lot size of 2 and capture a point size of 50 in every signal, we get a total amount of 31,500 and divided by 5 lakhs, which rounds to 6.3% per month. This is not guaranteed. Nothing is guaranteed in the options market. But conservatively, even if we get returns of 5% a month, you are making a killing. Okay. Now, if you don't have 5 lakhs, if you don't even have 2 lakhs, if you say you only have 50,000, stop. Do not trade options at all. Not just this software. Do not trade options at all. You spend your time, you spend your resources, you spend your energy on working on a strategy that might work for your mind. That is as per your psychology. If you have any capital which is less than 2 lakhs, 3 lakhs, stop trading or buying options, because you will lose that entire capital. You may try option selling and get the returns, but do not go for options buying if you have less than a capital of 2 lakhs. And mind you should always have a very reasonable expectations of the returns. Now, you might say, with 5 lakhs, if I am getting only 30,000 per month and it is very less, then let me be very straight with you. If we have that kind of mental pattern wherein 6% returns per month is not big enough for you, you are not suitable to be in the stock market at all. Forget about the options. You are not suitable to be in the stock market at all. As a matter of fact, you are not suitable to do any business in this world if you are not happy with returns of 6% or 5% or 4% a month. Okay. Let me be very straight with you. If it hurts people with less capital and people with high expectations, let it be heard. Let me be very blunt, but that is the fact. The reason is I was like this and I have spent so much money and energy trying to find a system that gives me heavy returns, high returns on a very less capital that I have, which proved to be very costly because I have spent more than 5 years on that. I have lost 5 years on that. Rather, should I say, I've gained so much experience in 5 years that I was able to build my own software which gives me 5% returns conservatively month on month. Okay. My losses, my failures over these many years has helped me in building a software that gives me money in options buying with reasonable returns. I'm happy with this. I'm very, very happy with the 5% returns. Now, the next question is, what kind of people should be okay trading this? If we have a suitable income already and you are already working professional and you are not satisfied with 6% returns, then it is this particular trading system is not suitable for you. Okay. But if we have huge capital like 10 lakhs, 20 lakhs, 30 lakhs, and you are in a position to not go out of your home, but you want to earn a very stable, suitable returns like 4 to 5% a month, and you are in a position to spend time in front of the computer, because you need to monitor the trades, you need to monitor this working of the software. This particular software is very much suitable to you. So guys, this is what I wanted to say about my trading system signal generator. I hope that I have covered many points: the obstacles faced by the bank options buyers, the advantages of having a stable signal generator that gives reasonable returns, and to whom this particular system is suitable to. So any person, any trader who has options trading experience and with a reasonable capital, they can approach me. I'm happy to help them in installing this system in their computer laptop. Okay. Thank you guys. In the next video, if I get proper views in this video, for this video, I will make another video explaining how these signals are automatically executed and the process involved in execution of these signals. That is a very interesting topic again. Okay. I request you to see this video again and again so that you will understand the complexity of this software. Thank you guys. Thank you. See you. Bye bye.